Success in Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
We're back on the Financial Survival Network. It's Kerry Lutz. We've got our regular Monday morning session with Andrew Hoffman. Andy, welcome back.
Always a pleasure to be here.
Hey, so usual faked government statistics that show everything. Well, they couldn't even fake the GDP report. So what do you make of that? That's the best they could do is 0.1% growth for the first quarter, but it's all due to the weather, right? Just a weather-related phenomena, correct?
Okay, so we'll have our little competition between the inflation, the employment, and the GDP statistics for the worst fudging of all time. Now, they said 0.1% was the GDP growth in the first quarter, and they were expecting 1%, and 2 months ago, everyone was expecting 3%, et cetera, and they love to say the weather. The fact is, it wasn't the weather. I mean, you look at John Williams' research, and he shows it clearly wasn't. And I did a piece a month ago or so, or 2 months, called Mother Nature's Had Enough, and I pretty much proved that the weather was immaterial in the big scheme of things, in this country at least. Maybe overall in the world we've had warmer weather, but here certainly it wasn't the weather that caused it. It's called the economy's falling apart, and whether you taper or not taper or lie about tapering, things continue to get worse, which leads us into the NFP report, which, as we all know, we have whistleblowers who have admitted that they fudged the data. But again, last month I predicted it would be a quote worse than expected number because the 10-year rate was up to 2.80, and per my article, 3% enough said they won't let the 10-year rate go above it, so they put out a quote worse than expected number. Yesterday or Thursday, I said it's going to be a better than expected number because rates had already fallen back down to the 260s. The thing was, it was quote better than expected, but they really overplayed their hand in the propaganda department because, as you could see, rates have plunged since. Gold prices are up, and the whole world is a Twitter by the fact of seeing this horrific report, which shows that it was up 288,000, but 234,000 was due to the birth-death model, which is what I pointed out on Thursday was going to happen. And of that, of course, as usual, all bad jobs, all part-time jobs, temp help jobs. I'm still amazed at how all these jobs they say are created by, quote, waiters and bartenders and retail, because we know we've had record store closures in the retail space, and we know that we've never had a worse environment for fast food. I mean, McDonald's is reporting negative comps. So exactly where are all these McDonald's that everyone is getting hired into? I don't know. And of course, under 55 years of age, we had a minus 259,000 jobs. All the jobs were above 55 years as usual, and it's people who are getting those jobs at McDonald's. The household survey said minus 73,000 for the month. So again, that was all a lie. And then the biggest thing of all was that they showed the unemployment rate fall from 6.7 to 6.3%, which was way below expectations. And again, I've been saying all along that there were 1.3 million people who went off of long-term unemployment benefits in December, and another 3.5 million people scheduled to do so throughout this year, which is a third over. So we should have theoretically fallen to this level by the BLS's calculation standards a long time ago. But what I have said is that because the Fed still had that silly policy of we're going to start raising rates once employment gets 6.5%. Well, while they still had that policy, the BLS would never let that rate go below 6.5. So now that the Fed finally said, okay, we got rid of that policy, they've, quote, released these people out of the labor force. So literally 1 million people left the labor force, 35-year low in the labor participation rate. And again, anyone who's looking at this report realizes you couldn't have a worse labor picture. And by the way, since then, we've had surging jobless claims. All the new PMI indicators are indicating drops in employment. So, I mean, the labor picture is worse than it ever was. And at some point, the Fed, they're not tapering, but at some point, they're going to admit, we're not tapering anymore because things are that bad.
Yeah, well, it's funny that just last week they said they went down to $45 billion a month, and they're on their merry way down to zero. So it appears, but at some point they're going to do a U-turn, right?
Well, the whole point is that they were never doing it in the first place. Tapering is just a pure lie. They figured, again, when I said they released those people, they've got this grand scheme of however the markets are moving, we will work with them. If the markets are very strong, we have leeway to do whatever we want. And that's why pretty much all of the S&P's gains, if you could believe this, going back 13 years or 14 years, emanate from the day before FOMC meetings. It's that important that right before the FOMC talks, markets are strong. So they have leeway to say stuff like, oh, we're going to taper, we're going to do this, we're going to do that, because they can't be forced by bad markets to say what they don't want to say, which is we're going to keep printing money. And the fact is, this is no different than anything else with tapering. They got the stock market really high. They know that they have to, at some point, say we're going to stop printing money. So with the stock markets high and the bond markets at all-time highs, they said, okay, now it's politically okay to say that we're tapering. The fact is, of course, they're not doing it. I wrote an article called Proof of the Tapering Mirage, which proves that they're not doing it. And then, of course, you have tiny little Belgium, which is a nothing nation, which has no money, all of a sudden buying almost $200 billion of treasuries in 3 months, which is clearly the Fed doing it through the ECB, because it's so ridiculous. It'll be like me buying private islands in Hawaii. It just ain't happening. I don't have the money to do it. So it's just a political game to try to get people to believe they're doing something prudent, which they're not. But the problem is the economy gets worse and worse, and not just our economy, but every economy, which is simultaneously imploding right now. The Fed is no longer going to have those strong markets. They're going to have to admit it. I mean, yesterday or Friday, when that number came out, the 10-year yield went below 2.6%. That's a 7-month low. It broke a quintuple bottom. And this is during supposed tapering. The point is they are actually supporting rates right now because they're afraid that people are going to get terrified. They're going to see the rates falling and going, oh, my God, everyone thinks we're really in a recession. We're supposed to be in a recovery. So I believe right now that 2.6, just like 3 was their high side, I think 2.6 is their low side right now. They don't want to let it go down, which is why they're going to keep putting out ridiculous diffusion indices that say that things are getting better, and they're going to keep saying recovery and we're going to keep tapering. But the fact is, you watch those rates. They know that there is the Yellen put and the Abe put in Japan and the Draghi put in Europe. They have nowhere to go. They won't go into stocks. Banks aren't lending. And so, I mean, it's getting so ugly. You're seeing the final ugly head coming out of this bastardized global money printing scheme.
Yeah, it's just remarkable how long it goes on for. It just drags on and on and on. And yeah, you talk about Japan, the PMI drop, the largest ever in the PMI drop.
Yeah, I mean, it's the 1-year anniversary of Abenomics. We got a year left, that is, until they double or triple up on it. And they have nothing to show for it. They have the highest inflation readings that they've had in, I think it's 5 or 10 years. The manufacturing PMI last month fell from 53.9 to 49.5, I believe, their biggest drop ever. So now they're basically moving into recession. They had that national sales tax increase only a few weeks ago, and it's caused a 25% drop in retail sales. 77% of the population believes there's no economic recovery. And that's just one country. The bigger news to me is China, which is, again, I can't emphasize enough. I think this is going to be the biggest economic crash in the history of mankind. I think it's going to make what happened here look like absolutely nothing. They've created $14 trillion of shadow banking debt just in the last 5 years, all to build worthless houses and plants and bridges and roads to nowhere and all that stuff. And I just read that this month, in fact, this morning it was announced there's 6 straight PMI in negative territory. And if you could believe this, a 47% year-over-year decline in home sales, including 65% in what they call Tier 2 cities. So, I mean, we are talking about a absolutely cataclysmic crash in China that is starting right now. Remember, they're also letting the yuan devalue further, which is only going to hurt the rest of the world more. And, of course, all those derivatives that are betting on the yuan going up. So it's just a mess everywhere. I challenge someone to find anything, anywhere that's positive other than the Dow Jones Propaganda Index, which is never allowed to fall.
Yeah, that's right. They're not letting it go down. And Yeah, what would happen if they allowed the Dow Jones Propaganda Index to fall, Andy?
That's the whole point. It's the number one leg of their stool. All they have left is money printing, market manipulation, and propaganda. And I wrote the other day, I forget which piece it was, the chronology of how they've upped the ante with their gold suppression over the past 13 years, which I've watched every day. Particularly, it really started, the craziness was in September 2011 when gold hit an all-time high. They clearly decided we're going to smash into oblivion, damn the ramifications. And then, of course, last year, the day that Obama meets with 15 CEOs of the too big to fail banks, gold falls $250 the next 2 days. And look what we've dealt with now the last year since. And the same goes with the Dow. Anytime the Dow falls in the slightest bit, the media, the Wall Street writes, "Oh, the world's falling apart." I mean, look at this morning. We wake up, we see Europe is down, 1.5%. The Dow is down 150 points. Within minutes, bam, it's up on the day. There's no reason for it. They never let it go down, and they will use their permanent open market operations, or POMO, every single day at 10 a.m. Eastern to stabilize not just the U.S., but the European markets every single day, no matter what the news.
Yeah, remarkable. And yeah, and it's the same with gold too. But lately, though, past couple of days, gold has been breaking out. And, on Friday, they never like to allow gold to go up on a Friday into the weekend, do they?
Well, they never like it to go up at all. And yes, Friday is, they're particularly sensitive about, but it's okay if it goes up a little. Now, the thing is, this particular Friday I truly believe that the NFP report backfired on them. I think that they believed, we're going to put out 288,000. And I mean, it's ridiculous because anyone could see the birth-death model and the internals of it are ridiculous. But I think they figured, look, rates have gotten down to low 260s, and we're going to put out this barn-burning number way ahead of the estimates, and the market will go up, and gold will go down, and interest rates will move back up into our safe range of, like 270. And it backfired on them, and gold went up. So, of course, they capped it. You saw gold. They even closed it at $12.99 by, make sure it wasn't over 1,300. And today it surged again, and they cap it again. It's the same thing. But the fact is, the interest rate on the 10-year bond is something that they have very little control over, a lot less control than people think. And they are right now desperately trying to support that rate because the last thing they want is the 10-year to plummet and signal to the world that, their tapering is no one's listening to their tapering about economic recovery. And of course, with gold, they can't let it go up. But, they're going to lose. I don't really care what the stock market does. It could hyperinflate. Zimbabwe did, Weimar Germany did. You'll lose your money in real terms, or maybe it'll crash. But the bond market, the fact is, I read an article today from Bloomberg that said the reason that people are buying is because pensions are rebalancing their portfolios, and it could provide all this extra demand for long-term bonds in the next coming years. Well, yeah, they can rebalance if they want to sell in a highly overvalued asset to buy an even more overvalued asset. I mean, if this is where the prudence of our pension funds is, buying U.S. Treasuries at all-time low yields with high inflation and surging debt and a falling economy, while the government is saying that they're going to taper on top of that, just shows you the state of our Wall Street institutions and how completely broken they are.
Well, more on that when we return on the Financial Survival Network.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And we are back with Andrew Hoffman. It's Monday, Cinco de Mayo, time to go celebrate because things are going so well in the economy. And hey, we didn't even talk about the Ukraine, and things keep ratcheting up there. It seems like somebody wants a war, but it doesn't really seem to be in anybody's interest, does it?
Well, I mean, again, here's that buzzword, de-escalation. How many times in the last month have we seen gold smash and they write, it's because of de-escalation? There was never even the slightest inkling of de-escalation from the beginning 2 months ago. I remember one time Putin gave a speech, and while the speech was going on, they rocketed the S&P up and smashed gold and wrote that it was because of de-escalation. You read the speech, and it couldn't have been more hostile to America and more escalating, if you want to use a word. But again, you don't even hear that de-escalation anymore, because things are getting so bad. I mean, people are dying there now. The rhetoric is off the charts, the East versus West, the sanctions. I mean, again, I wrote about it last week. I mean, it's a big deal. This is one of the darkest corners of the planet. When you talk about histories of war and hatred and genocide, and now the strategic importance that this area has taken on because of its Black Sea warm water port for the Russians, because of its natural gas pipelines. This is a big deal, and people will fight major wars over this area. And again, this is just one of the many things to worry about when you're worrying about protecting your portfolio, about what's going forward, what's going to happen going forward.
Oh, yeah. Yeah, I mean, there's just not a lot of good news out there, and you have to understand what's going on here, because this is just, this is not the norm. The norm was the market would go down, the economy would tank a little bit, GDP would go down a couple of percent, housing starts would go down 10, 15%, housing sales would go down 15, maybe 20%, and the wizards at the Federal Reserve would start priming the pump. New money would hit the market, and all would be forgiven, right? But that's not what's happening anymore here. It's a whole new world out there, I guess, is what I'm saying, right?
We're at a 20-year low right now of mortgage originations. 20-year low. This is a supposed boom that just started. The Case-Shiller Index, which is a major lagging indicator, it takes forever for them to figure out what's really going on, now has national prices falling for 4 months in a row. And we saw existing home sales down last week, 15%. We see the NAHB, the National Association of Home Builders, which is the most bullish cheerleading BS group of propaganda ever, has reported 3 months in a row an utter crash in expectations of its group. Not to mention even home builder stocks have been falling. I mean, you have to be crazy to believe that there's anything positive going on in the housing market. I'm not talking about a handful of things here and there. We're talking about the inventories in the places where the Fed financed Wall Street money raced in, like in Arizona and Florida, are people that are racing out that money right now. I mean, racing out. The buy to rent, you look at the statistics coming out showing home ownership is at a multi-decade low, and at the same time, rents are at an all-time high. So the Wall Street money has driven up prices so no one can afford a house, and because they're all doing the buy to rent, they drove up rents so no one could afford to rent a house anymore. I mean, this is how a nation gets destroyed by a central bank and the bankers that own the politicians and allow this to happen.
Yeah, and this is the way it goes. I mean, we knew this was coming, and it's so obvious, and yet it's obvious to everyone. It's only obvious to a very few people, relatively speaking here, Andy. I mean, everyone else is just going about their merry way, watching this thing go down, right?
Yeah, and for most, it's not merry. That's the whole point. I mean, you're really hard pressed to come across. I mean, everything I deal with in the world, I see things are getting weaker. I mean, I anecdotally, everywhere you go, you see it. So yes, there is that 1%, which is probably going to shrink down to 0.5% soon of people who are going their merry way. But for the most part, people are struggling, and they're only going to struggle more. The costs of living are not going down. And the labor participation rate is not going up, and wages are not going up. So, all you can do is, if you are one of the few people who listen to shows like this or read blogs like mine, then you may be able to help yourself before things really get bad, which of course they must, because all fiat currencies collapse. And the way you know a fiat currency is really near the end is when the debt starts rising parabolically, because it can only get bigger. It's a Ponzi scheme. It must grow bigger. We are seeing that everywhere, from the United States government to the consumers. You see all these lies about Wall Street has all-time high cash. Yeah, and it has all-time high debt also. So net of cash, its debt is at all-time high levels. Who cares how much cash they have? It's cash relative to debt. It's across the board. Municipalities, individuals. I read today that 56% of all Americans have subprime credit. So who's going to fuel the consumer economy recovery when 70% of the economy is consumption?
Good question. And, I guess it'll be like that South Park where he'll get a new credit card with an unlimited credit limit, and he'll just loan money to everybody else, right?
Pretty much.
I mean, how else could it happen?
Yeah, look, I don't enjoy writing about this and talking about this stuff. My job is to tell the truth. And it's also my passion to tell the truth. So, so sue me. I'm trying to help probably no more than 1% of the population to do something for themselves. The rest either don't have the funds or the interest of care, or the care of figuring out what's the right thing to do.
Yeah, well, we're kind of in a box here. There's not a lot of options, Andy, but at 68 to 67 to 1, the gold to silver ratio, silver does look like quite a bit of a buy.
Yeah, well, obviously they both do, because both metals are trading at prices well below, and I mean well below the cost of production. And, we've already discussed all cash costs versus all-in costs, which is, cash cost is just a ridiculous thing. But the real all-in cost of a business is the amount of the price that you need to not only report a profit, but also to expand your reserves so you can stay in business over time. And for gold, that price is in the 1500s. I mean, the CEO of Goldfields, the fourth largest producer in the world, said that flat out a few months ago. And as for silver, there's no doubt in my mind. I mean, the price just for them to be profitable, actually report net income, is probably $25 to $30. Not probably, it is $25 to $30. The price of sustaining the business is even higher. And remember, 2/3 of silver production is byproduct from base metals. And now that the global economy is collapsing, there's going to be even less base metal production as well. So, but you talk about the gold silver ratio. I mean, we could talk about it. We've talked about it ad nauseum. I mean, the historical ratio for going back hundreds of years is about 15 to 1, because that's the rate that they came out of the ground, 15 ounces of silver to 1 ounce of gold. Now that rate is down to 9, because silver has been depleting much faster. And of course, all the silver that's ever been mined has been used, or almost all of it. There's no more than 2 billion ounces above ground, and most of it's never going to see the light of day, as in my silver and your silver. So it's a much tighter market, and almost all of it gets taken up by indisposable industrial demand anyway. And it's just as monetary as gold, and just as monetary as it's ever been before. So, for it to be in the mid to high 60s, given the state of the global economy and the money printing, is absolutely insane. Remember, it got down to under 40 in 2011. And I personally believe it's going to be under 15 at some point in the future.
Just a question of when. It's just a question of when, not if, for sure. So anyway, you find Andy at milesfranklin.com. Make sure you go and subscribe to his daily newsletter, Must Reading, because that's where you're going to find out everything that we've been talking about. Go to financialsurvivalnetwork.com. Got the link over there. And subscribe to our newsletter as well. It's free. Comes out every week or so. Got a good one coming up any moment now. Andy, we'll talk to you next week. You be well.
Looking forward to it.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.